Hello guys, and glad to have you on board again. Today we are going to do something a bit different than our usual weekly reviews, because today we're going to do another type of analysis that I like to perform a little once in a while when the opportunity is there, is using comparison charts, which is basically not doing the stupid copy, paste, replicate stuff, but basically diving deeper into price study, trying to figure out resonances. So really not the same stuff, but some kind of similar patterns in terms of structures and amplitude. But of course, these things vary. So the things we're going to compare today are going to be different timescales and of course different amplitudes. But what we care about is how the price action created itself into similar patterns, which of course doesn't give us any goddamn clue about what's coming next. This is definitely not what's meant to be done out there, but to orientate somehow probabilities of behaviors that occurred back then into similar context as well. So you definitely have to study things that have a correlated context. So without further ado, let's talk about what we're going to compare today. Right in the bottom of our chart is the crypto total, kind of basically a global index of money flowing into cryptocurrencies. This is definitely the hot spot as of 2021 and 2020, late 2020 actually. So yeah, of course, a lot of people are questioning whether or not this thing is going to last much longer. Is this just a short-term bubble and all of those things? So, well, today I got into something that brought kind of a deeper reflection to me, which is most importantly just not even trying to figure out where it's going to end, just figure out how far could we be with something quite similar, something that has been revolutionary, that everyone braced for adoption, but of course took several years to get to fully reach out its potential. Well, of course, not to mention the dot-com bubble. It has been a bubble, it bursted, of course, we all know about that, and the main adoption that was back then sold at very high prices actually turned out to came later on. So this is definitely what I think is on the verge to be the case for cryptocurrency. There's definitely a boast for more gains today that may turn this thing into another bubble. Of course, 2018 has been one, but I think, yes, we might be on the verge to create another one. Just how mature could we be is something that we're going to talk about today. So like I said, no forecasting. This is definitely not something you can blindly trade. We always trade out of technical scenarios, risk limitations, and context, favorable context, okay? So no speculative perspective today, just a background ID on how mature and how long could we still have beyond. So the basic starting point for this thinking process has been this, which I came across into Twitter, and I found it astonishingly interesting. So basically, this is comparing the crypto bubble or the crypto emergency consensus we are in right now, and how far are we compared to the growth we've seen on total users of internet. So basically, starting out of 1992 up to 2006, which is mainland adoption and stuff like that. Of course, the 20 bubble crashed, the dot-com bubble crashed over the 2000 era, which means the crash occurs right in between. The main adoption comes later down the road. Speculation always is much, much ahead of the actual main adoption. So if we take it as of right now, this is where we would be. Of course, at the pace of 50% yearly growth, which is what we have, the only thing incomparable we have in history is this dot-com bubble. And at least we have data surrounding these things. So we can make somehow the correlation. Of course, that's, like I said, and I stand for this, this is not a forecast, but really we try to find something similar to just get a sense of timing and potential timings. So reaching out main adoption would eventually be out of 2030, which I think is an approximately reasonable area of main adoption of cryptocurrencies, digital money. Okay, so I think there could be an in-between switch surrounding the crypto bubble, in which we could have an additional 2 to 3 years of growth, which of course in here as well correlates with my personal technical reading of the market now. I definitely don't think that this is over, and we'll see all about that. So this is more about it. That will give us an approximate 2 to 5 years of extended market growth. Of course, this is pure raw speculations on timings before we reach out a very dangerous area in which speculation overcomes the actual adoption, which means adoption might be coming eventually later down the road, but we'll probably over speculate on it because, of course, markets are meant to do this, to speculate and anticipate, but at some point, too much money in, not many people getting in to support prices means the bubble just burst itself. So now let's switch back to our chart with this perspective and try to give it a glimpse of, does the technical pattern suggest that there is a likely similarity between the two? We have a similarity in terms of growth of adoption and potential global use later down in the future, but what prices does tell us about that? Trying to switch back to our chart. Yeah, sure thing. So this is what we have now, okay? So of course, no shit Sherlock, this is the NASDAQ and this is the crypto total. So, like I said, nothing ever replicates as a copy-paste. It's always a matter of schemes and resonance. Things tend to replicate similarly, but always using different amplitudes and different timescales. So, as we can see in here, I'm displaying something that has been scrolling for more than 3 years into the NASDAQ back then and has been a multiplying effect of a 400 to 1300. Okay, so pretty much threefolds. This is definitely not the same amplitude we're seeing out there because we're starting pretty much as of 400 billion and we are now pricing fivefold. Okay, so we said different amplitudes, but what we care about is the similarities into schemes and patterns into price actions. Okay, of course, though time varies and amplitude varies, we never copy paste. Okay, first settlement in here. Then I try to highlight some kind of similarities. The first one I would like is this step phase in which, of course, the bull run starts, just like we've seen back then. We're definitely crossing over some trend lines. Even though they were ascending, we are breaking above them, which means the momentum accelerates. This is really when things start to keep pacing up. This is definitely the broad market run we've had late stage 2020. And of course, the big rally we followed through early 21, something I definitely wasn't forecasting. But now that it's there, I have to deal with it. So as we can see, same thing back then, kind of a bit of hesitation, but then rapidly afterwards, the market keep reaccelerating and breaking some trend lines once again. Okay, we built some kind of rising trend channels and we try to break above them. That's exactly the kind of things we've made in here. We've built kind of a flat consolidation structure, a little bit of a convergence in the trend line, but still, I'm using closed candles, not the wicks and stuff like that. Of course, a bit more volatility. So we break above, and then comes another set of consolidation, like in between settlements. What matters in here is the amplitude of these pullbacks. This one doesn't come any more than 25% drop, okay? Quite similar, actually, that the things we've seen back then, 15, 20%. So no major drawdowns into prices. We keep basically drawing down for something like 15 to 20% into intermediate consolidation. Then comes this final run in here, which looks like something is getting overpriced in. Like we're getting exhausted at some point. This is exactly what we've experienced in the early stages of April. And of course comes a deeper pullback with this one getting to build a mature range, which is absolutely astonishing in here because we have the exact same ABC structure, which I tend to like, which means that in here we took a bit of time to think about it and breathe a little while. Of course, no deep consolidation, just a 19% pullback back then. Similar patterns comes for cryptocurrencies during this tight consolidation period. But what matters in here is to understand that we finally take some time after quite a bull run to actually think about consolidating. We just fail. We just cannot succeed consolidating because of too much demand. And basically, that is correlated with fundamental pushing ups because, of course, people are getting to adopt this thing more and more. People were using internet back then more and more. I remember that. That is my youth age. I remember all of those things in which internet wasn't nearly a thing. It was just the beginning of something. And that was really, really a thing to believe in. So I've experienced this 1997 area back then. I really remember this. These are my first memories of internet with 56K connections and all of those things that we know pretty damn far away from. But still, the similarity might be the same for cryptocurrencies today. We're getting to think that, sure thing, that sounds logical to use digital money rather than paper money and all of its confluence of elements that led us to the printing money endlessly and stuff like that, loads of debt. All of the problems we see now are pretty much similar. Yes, we can say that. So, of course, you know the end of it because you know that the 2000 bubble got way beyond that because 1997 definitely wasn't the market top. So now let's try to figure out how big the late stage market rally leading to the bubble was. Because in here, well, sure thing, prices were a bit of extended. As we can see, amplitudes are not the same, but they're kind of same kind of magnitude. This was some kind of a fourth fold. In here, we're fivefold. So this is not a significant difference. So in here, we're not going to use amplitude as a reference to try figuring out how high Bitcoin prices or cryptocurrency prices in general, because we're looking at crypto total, could go right up to. This is definitely not the point. Okay, so let's put the perspective. Okay, so we keep pushing. Got a little bit of another consolidation. So I still expect the market in here to try eventually hesitating yet another range. As we can see, this previous range overlapped the previous one. So I still tend to believe that there could be a little bit of a drop into cryptocurrency prices, but nothing too fancy. In terms of amplitude, that would be nearly a 10% drop and nothing too fancy. Okay, kind of intermediate consolidation, each and every one building a high low point and keep pushing to higher high point. In here, what we would notice is that the market accelerates once again. So if we ever get a tight correction, I think this could hardly go anywhere beyond the previous market top area, which will likely be bought rapidly. And we can expect later on to break these pace to the upside. So are we going to eventually have a bull rally throughout the early stages of summer? I tend to believe this could very likely show up. What's going to be the driver of it? It's goddamn hard to say. Is it going to be Ethereum? Is it going to be DeFi? All of those things. Lots of potential. Are we going to get just something that comes out of nowhere after the DeFi, NFT things? We could eventually just get a new adoptive scheme that could bring another set of new money into the market. These are so much things we can talk about and speculate upon. So let's keep it pushing. Of course, quite of a downside move comes later on. So I tend to say that big range is down the corner for this summer. Don't take it for granted. If prices keep pushing up, this is most likely just a setup for new buyers to get in. Still, the adoption pushes up into background, but still, at some point, prices are fairly high right now. And I tend to believe that the 50K area or 50 to 60K area into Bitcoin is very less likely going to be broken anytime soon. So we could spend the entire summer, or at least depending on the variability of the scale, we could spend eventually 1 to a couple of months trying to accelerate, but failing and consolidating. What needs to be said out there is that we get some kind of a mature consolidation once again, but this one with deeper pullbacks. Okay, this one was limited to 20% drawdowns. This one is going to be a major 25 to 30. Okay, so something will look like it's really changing and losing its pace. What matters in here is that, yes, we break a support. That is really, really important for you to understand. Because we might be during the summer, if we replicate the similarities, okay, the resonances, means we could eventually break a support. Whilst we still, of course, break resistances. If you forget about what I said previously, I said we're likely going to accelerate to the upside. So might be an overextension, kind of overexcitement type of pattern. We break some resistances, bringing a lot of dumb money in, and then we rapidly break a support right after. We consolidate for a little while on a quite volatile range. Okay, this is what we need to take out of this information. And later on, of course, quite a V-shaped reactivation. Broader adoption means still more demand, means anyhow, even if we draw down significantly, there are always going to be more buyers than sellers. That's what history tells us. Of course, that is a big question mark. We don't know if there is going to be a sustained demand for cryptocurrencies, which just take as an assumption into this study. But with a broad adoption, we could seriously accelerate, which means in here kind of going for panic sellings, kind of doubts, but still afterwards, hell of a rally to come in. I suggest in here, probably another set of demand. Like I said, after DeFi, after NFTs have gone to come to a thing, I think another kind of demand sector might be driving this force. God knows what it will be, but yeah, expect some kind of late summer, eventually August to September, which I think could be the broad adoption for a new rally that could bring a lot more fresh money into the market. Of course, afterwards, we know all of it. No significant pullback, just sideways action, always high low point and higher high points until we get to the final exhaustion pattern leading us to the 20 bubble market top. So in here, taking out the amplitude, okay, because of course, no things replicate exactly the same way, but we just think of it as if there is some new way of demand coming late stage summer, this might be something to follow up on. This could drive price and main adoption much, much higher. But what it tells us afterwards is that if we go for a bubble, can last eventually another year, a couple years at best, but we're likely going to overextend prices to a point in which, of course, a huge drawdown comes later on, significant drawdown, up to 40 to 50% drop in price, and then the market will never recover from it, and it will have to digest for several years. So I'm not saying things will replicate the way they did. I'm just saying that the contexts are pretty damn similar. The adoption rates are the same as well. So if you think the crypto market will top up when it reaches out main adoption, you probably are going to be wrong. Because history tells us that the market anyway is going to anticipate these things. So the market is going to be ahead of market adoption to a point that, of course, we over speculate to dangerous valuation that makes absolutely no logical sense. Just like back then, everything was .com stamped and we were just selling some stupid stuff at crazy fucking pricings. We're already seeing the roots of it today into the crypto sector. Scams have always been part of it, and I intend to believe that more and more scams are on the verge to come. So pay attention to what you're paying for. Take on the good projects. Of course, the Amazons, the Facebooks, and all of the real .com giants we're experiencing today, the Apples and stuff like that, were definitely among these guys back then. They managed to survive the crash, but they still took some hard hits in between. So if you're holding projects and crypto projects for 20 years now, I think you're definitely not into the right spot. Things have to have some kind of a 1 to 2 to 3 years extended probabilities if you intend to trade prices. Then later on, take some significant profits, expect some kind of a crashing pattern, which means several years of consolidation whilst we'll still have a broad adoption. Okay? And eventually, 5 to 10 years from now, we'll all consider cryptocurrencies as just another thing, just like internet was back then. You're going to use it daily without even questioning the way it got into your life. You would just think of it as naturally setting itself. That's what I think about cryptocurrencies anyway. That's just a natural flow of time. But of course, only time will tell. So that being said, no speculation. Remember to trade upon the patterns you know. Just don't trade out of an idea. This is just an idea. See you guys later.